Hi, you're watching BiTV European Service. I'm Ines Budget, and today I welcome Lonneke Löwik, who is Inrev CEO. Hello, and thank you for joining us.
Nice to see you, Ines.
Nice to see you too. So I will start with a broad question. How important are ESG issues in the European real estate industry today?
If I look at ESG, I see it more than a decision about doing what is environmentally or socially responsible or morally right. As it is defined by the UN PRI, it is about the generation of long-term returns, which depends on stable, well-functioning and well-governed social, environmental and economic systems. And over the last decade, our industry has acknowledged the importance of integrating ESG issues into investment decisions to achieve risk reduction and to learn more about sustainability opportunities. And in the last year, during the COVID-19 pandemic, it became clear that companies that have a high level of resilience have an advantage over companies that haven't thought about such crisis scenarios before. And with many ESG issues, especially climate change, can lead to similar new crises for our industry, investments considering potential impacts of this will be at a clear advantage going forward. So while initially the focus of the industry was on energy saving and reducing greenhouse gas emission, now with the climate change emergency, many investors and investment managers are also assessing the impact of climate risk on their entire portfolios. So we see a growing awareness and action to manage and mitigate physical risk of climate change and the risk associated with the transition to a low carbon economy. And investors and managers are moving their buildings towards net zero.
How can real estate players act on to address these issues in their activities?
Well, I would say the real estate industry has the opportunity and I think the responsibility to address these issues. First of all, our industry is responsible for nearly 40% of the global CO2 emission and therefore should be part of the solution. Secondly, it has a long investment horizon, which is important because ESG issues are likely to be material when assessed over longer periods. So action should be taken now to avoid obsolescence over the assets going forward. Thirdly, many ESG issues play out at local level. For example, extreme weather, flooding, hurricanes, and community relations. And real estate assets are linked to a specific geographic location. And real estate players could address these issues by integrating ESG into the decision-making process. It is important to have a clear strategy and policy on ESG issues. It should be part of an entire investment process, from due diligence to responsible exit strategies. And also important to measure and monitor the ESG profile of one's entire portfolio as part of your risk management strategy. By doing so, you can identify potential ESG related risks before they become material. And increased transparency is crucial because in order to achieve a certain level of transparency, we need to measure the ESG performance for the entire portfolio. ESG assessments, benchmarking results, and disclosure frameworks are important sources to measure the performance and to communicate the results.
Right, and finally, I have one last question. In Europe, are ESG needs greater in certain sector? I don't know, maybe either in asset classes or locations?
Interesting. Well, I would say if you look at the asset classes, not so much, because if we look at the energy use and consumption level for real estate portfolios, we don't see a major difference in the asset classes. We look, for example, to the GRESB 2020 results. The hotel sector has the highest energy intensity, followed by the office and the retail sector, but not a major difference. There is a difference, however, how data is being collected, because that related very much on the relationship with the tenants and the stakeholders, and there's a clear difference between the sectors. But if we look at locations, I would say, as I said before, real estate is highly exposed to risks that are associated to climate risk, which are place specific. So certain places will bear more risk than others. But if we look beyond climate change risk, there are also risks associated with the transition towards the low carbon economy that is located differently. Because if we think about changing market expectations, rising energy costs, carbon regulations. And therefore, we support initiatives that identify climate risk and promote sustainable investments at a regional level, such as the CREM project for Europe. But if we look at climate risk changes, there are also local risks that are associated with social and governance issues. ESG risk exposure and opportunities different from country to country, region to region, because there are local differences between governance standards, the strength of ESG related regulations, and other factors like the culture, community engagement, etc. So real estate players who have cross-border activities need to take into account ESG issues with regional differences.
Right, well, Lonneke and Löwik, thank you so much for joining us today.
You're welcome. Nice to have the chance to speak to you.
Thank you all for watching.